Hi and welcome to another edition of our daily market outlook report. Today, anybody who's trading US equities, US equity indices, and also US dollar crosses will be paying close attention to US jobless claims data, which is forecasted to show an increase of additional 3 million people. Now, that figure will have direct impact on probably the most anticipated and closely watched data release for this week, which is due tomorrow, and that's US non-farm payrolls, US unemployment rate, and average earnings data. Forecasts are pointing to a significant increase of US unemployment rate from current 4.4% to possibly 14. Some analysts are pointing to a 16% increase, and that could trigger a severe volatility across US equity indices, US dollar, possibly even set the expectations for the trading sentiment for the forthcoming week across global equity markets. Now, let's take a look at this is gold intraday price action. We can see that the price of gold is basically coiling. Its energy is building up here. The daily time frame, we are seeing an uptrend. The key trading level for gold going forward is at 1700. It's psychologically important level. It's a round number. And above that level we have this falling resistance trend line, which we can create by connecting the sequence of lower highs, connecting the sequence of higher lows. This appears to be creating a coiling price action, often referred to as symmetrical triangle. Majority of the people who trade price action tend to see this type of patterns, and they tend to react to them. These are referred as continuation patterns. Continuation patterns, they have the tendency to break in a direction of the prevailing trend, and in our case that would be on the upside. So what bulls are waiting for, they're waiting for a breakout back above 1700 and a break above 1720, 1724, a retest of that level from above as a newly found support. And from the measured move point of view, they would be looking at the widest point of this consolidation and extend it to the upside to find potential resistances, therefore estimated take profit levels, initially targeting 1733, 1744, 1755, which are clusters of these previous highs. Breakout above that level could potentially open the way for an extension to the upside towards 1800, which is a nice and round number, or 1812, which would be based on symmetrical move of this coiling price action. Yet again, energy build up, these types of patterns, they have the tendency to precede a volatile breakout moves. The alternative is, if that doesn't happen and loads of people are sucked in to go long, or maybe they're front running this type of move and they're already in this position, if we see a loss of this support, initial support down here at 1670, 1670, a retest of that level from underneath as a newly found resistance, this would be negated and potentially morphed into something else, pointing to a very possible extension to the downside and retest of additional downside supports at 1650, 1640. Loss of that level could turn this into quite bearish, potentially targeting additional support towards 1630 or 1600. So basically an end of day close below 1670 would negate the current a bullish outlook, pointing to an existence of this symmetrical triangle, which is in price action terms bullish continuation pattern, and it needs to be confirmed with a breakout to the upside, therefore in the direction of the prevailing trend. Thank you for watching. Thank you for listening. Stay safe. Happy trading. Bye for now.